What's up, investors? It's the Russian dude. Let's talk about Wall Street, which is no longer concerned, which is no longer convinced that the soft landing is possible. Some comments and statements from the Federal Reserve, and that the rates most likely will remain wherever they are, will be frozen with the probability of 95.3%. To begin with, the most recent US unemployment report shows that the rate of unemployment right now is at 4.1%, previously it was 4%, a very slight increase of only 0.1%, which is not that much gonna influence the inflation that we have right now. You can see the unemployment on this graph right here, and it is right now at its maximum level since December 2021. At the same time, average hourly earnings year over year right now at 3.9%, which is exactly aligned with the estimations, and previously it was 4.1%. Which is contributing to a very slight, extremely slight decrease to the inflation. But non-farm payrolls came at 206,000, even though the estimations were 191,000, and this one is contributing towards an increase, just once again also slight increase in the inflation. So basically those three reports, they kinda net each other out, providing absolutely almost no influence to inflation whatsoever. And so it is very interesting right now to hear the comments and the statements from the Federal Reserve, specifically obviously from its chairman Jerome Powell. First of all, he did mention that the fight against inflation last year was a significant progress, which is relatively true, but this year the progress is extremely minimal. We are already 7 months into 2024, and well, the inflation is just barely budging, still remaining way above the target level of 2%. He then also spoke about the jobs market, saying that unemployment is relatively low, jobs are going up just a little bit as well, but average hourly earnings, they start to just a little bit decrease, which once again what I just said like 1 minute ago, everything just cancels each other out. And then he also mentioned that the GDP growth in the first quarter of 2024 was literally just okay. He then proceeded by saying that inflation is not the only program that the Federal Reserve is seeing right now before they can start cutting the interest rates. Another one of these problems is the jobs market, which right now the situation, at least in this part of the problem, is getting a little bit under control, so at least right now it is not overheated. But so far, yes, until the Federal Reserve receives more positive data, they will not start reducing the interest rates until they see confidence in reaching 2% target inflation. Because if you do cut rates way too early, you can harm the economy even further and undo the whole process of the last 2 years. But at the same time, if you keep the rates high for an extended period of time, this can severely slow down the economy, which in the future will be harder to restart it. But thankfully, once again, according to Jerome Powell, the US economy is not overheated right now. The inflation is, maybe it's not budging, but at least it is relatively under control. For this reason, it is extremely unlikely to see rates hikes in the near future, but at the same time, there are no positive signals yet to cut the rates. And because of this, the probability that the rates will remain at the same level of 5.25 to 5.5% during the next FOMC meeting in July, the probability that the rates will be frozen approximately at 95.3%, which is very certain. And so, as a result of all this, the Wall Street started to issue one of the first warning signs. For example, according to Morgan Stanley, they do see that the probability of a correction of at least 10% by the end of 2024 is now getting very high. Because, just like we told previously, still a lot of market participants, both retail and institutional investors, some of them for some reason they still see 2 rate cuts by the end of 2024. Exactly the same estimations, exactly the same expectations they had in the beginning of this year. Well, now we are already in July. Well, they still see somehow 2 rate cuts, well, good luck to them. And for example, according also to the CEO of the JP Morgan, Jamie Dimon, he is now seeing that the probability of soft landing is now extremely low. Just not to repeat myself for the second, third time, the reasons for this is everything what we just talked about and even more. If the Federal Reserve cuts rates too early, this can reaccelerate the inflation. If the Federal Reserve does not cut rates at all, this might stop the economy, with extremely being hard to restart it in the future. That is why what Jamie Dimon kinda sees that the Federal Reserve reached a dead end, that not a single decision is a decision that they should take 100% without thinking otherwise. The best way to see it is that any single decision that the Federal Reserve can take in the near future, it is basically selecting the least worst decision from the worst possible outcomes. Well, something like this. And to end this video, right here you can see the upcoming earnings reports of this month, because we are right now in the beginning of the next earnings report season. And as always guys, thanks so much for watching, please like this video, subscribe to my channel if you like this, find informative or both, and see you tomorrow.